Welcome to the deep dive. Today we're looking into Chinese tech stocks, specifically Alibaba's latest performance and how the market's taking it.
Yeah, we've got their earnings reports, plus some takes from major investment firms.
Right. And our aim here is for you to get a handle on the key factors at play and maybe decode some of these signals that seem, well, a bit contradictory.
It's definitely a complex picture. So Alibaba, they announced revenue was up 6.6% compared to last year, hit about
Okay.
$32.8 billion.
Which, on the face of it, sounds pretty solid. Growth is growth.
It does, but it actually missed what analysts were predicting.
Ah, okay. And that explains the market reaction. Their U.S.-listed shares, the ADS.
Exactly, they dropped about
Mhm.
7.6% right after the news came out. So yeah, growth, but not the growth the market was pricing in or maybe hoping for.
Understood. So the expectation game really matters there. But were there bright spots within those numbers?
Oh, definitely. If you drill down a bit, their main e-commerce platforms, Taobao and Tmall, they showed pretty healthy 9% growth.
Okay, that's solid for the core business.
In the cloud segment, that jumped 18%. Quite impressive, actually. So you see pockets of real strength.
Right. Strong growth in key areas. Okay, let's zoom out then. How are the big investment players reading this? We heard Michael Burry's firm, Scion.
Yeah, Scion Asset Management, they're quite closely watched, and reports suggest they've taken a more, let's say, bearish position on Chinese tech, including Alibaba.
And they're not alone in that caution, are they?
No. David Tepper over at Appaloosa Management, another big name, has also reportedly trimmed holdings in several Chinese tech firms.
So when investors like Burry and Tepper make these moves, selling or betting against stocks, it suggests a lack of confidence?
It can, yes. It often signals concern about future performance, maybe near term or even longer term, and moves like that can certainly influence wider market sentiment.
But given those growth pockets you mentioned, like cloud, is it possible they're focusing more on, say, broader regulatory risks or maybe longer-term structural issues?
That's probably it. It's likely a mix of things. You know, the ongoing regulatory environment in China always plays a role, plus maybe just a general reassessment of how fast these giants can realistically keep growing.
Okay, so there's caution from some big investors, but it's not all negative sentiment across the board in Chinese tech, right?
Absolutely not. Look at Tencent, for instance. Completely different story recently. They reported really strong revenue growth, 13% year over year.
Wow, okay. That's quite a bit higher than Alibaba's number. What's driving that for Tencent?
Well, a lot of it seems tied to their gaming business, which has been performing well, and significantly, their investments in artificial intelligence.
Ah, AI, that keeps coming up.
Yes, and it's becoming really fascinating. It looks like companies making serious headway in investing in and actually using AI tech are finding new ways to grow, even in this tough market.
So for Tencent, that's boosting gaming, maybe other services too.
Seems like it. Enhancing user experiences, creating new features, it's a potential edge.
Okay, so let's try and distill this for you listening. What are the main takeaways here?
Well, first, I'd say the picture, even for one company like Alibaba, isn't simple.
Yeah.
It's not black and white. You've got growth in really important segments, but also this broader investor caution.
Right, mixed signals.
Second, watching what major investors do gives you valuable clues, but, it's just one part of the picture. Don't follow blindly.
Got it. And third.
AI. The development and application of artificial intelligence really seems to be emerging as a key factor, maybe the factor, that could separate the winners from the losers going forward in Chinese tech.
So definitely not a straightforward buy or sell recommendation for the whole sector then. What should you keep in mind if you're looking at this space?
I think diversification is still crucial. Maybe balancing exposure between Chinese tech and, say, U.S. tech could be a smart way to manage risk.
And always keep an eye on the bigger picture.
Absolutely. Geopolitics, regulations, those external factors always matter for these investments. Stay informed.
So, to recap, we see some solid underlying growth, especially in cloud for Alibaba, but tempered by missed expectations and some notable investor caution. Then you have Tencent showing stronger overall growth, maybe pointing to the power of AI.
Precisely. Just underscores the complexity. You really need to dig deeper than the headline numbers.
Okay, here's a final thought for you to chew on. Given how fast AI is moving, and this cautious mood from some big investors, what specific things, metrics, developments, announcements do you think will be the most crucial signs to watch to figure out where Chinese tech companies are actually headed?